Happy Monday, everybody. I hope you had a great weekend. If you stayed up late watching the Super Bowl, I'll try to speak a little more quietly for you. So I found, as I'm sure you noticed, that the Monday videos have gotten a little bit long. There's just so much to talk about. So I'm going to work on that this week. I've heard that watching me in the normal speed seems like you're watching at 1.5 speed. So feel free to speed me up or slow me down based on the technology you've got. So, okay, today is the 14th of February, and this is your Monday market update. As always, today we're going to recap what happened last week and then speak about what we're going to be watching for this week. Let's jump right in, try to waste no time. Monday, we had the markets open higher, but we were not able to get any upside momentum. Instead, they just chopped sideways for most of the morning. It was a quiet news day. Friday's blowout job numbers are still in people's minds, along with great earnings from Amazon and horrible earnings from Meta. We talked about that already. The stocks turned lower in the afternoon, stabilized and settled for a pretty quiet close. The Dow was flat, S&P was down 17, NASDAQ down 84. 10-year yield hit 1.93%, settled down at 1.92. The 10-2 spread at a 60 basis point number. So the news from Friday left the market to do some more thinking, not just reacting, which is, of course, what these computers are doing all the time, is just reacting instead of thinking. What should the outlook be for the economic recovery, and what should monetary policy outlook look like? So the market was an interesting spot. We can either break one way or the other. It's either going to break and see revisit the lows from January, or we're going to see and revisit some old highs, and that's obviously we'll have to see what's going to come with that. Ukraine and Russia were trying to move into the headlines. Spoiler alert, they got those headlines by the end of the week. Good, bad, and ugly scenarios. The good is, of course, that diplomacy wins. The bad is that we get some sort of small skirmish, and of course, the ugly is that we get a full invasion. We'll see if this video report is old by the time you actually see it. Let's move into Tuesday, which is a bit of the opposite of Monday. Opened with some losses, but could not get any downside momentum. Sound like a mirror image of Monday. Still quiet on the news front. Plenty of fireworks for later in the week. Even with the 10-year yield moving as high as 1.96%, stocks moved higher. Dow up 1%, S&P up just a little bit less than that, and the NASDAQ was up 1.3%. Overall, the market seems to be getting some confidence that the economy can keep growing in the face of all of the planned and announced Fed action. So remember, that's all versus the stagflation fear. We're going to continue to hear about that. Everyone was just positioning for the upcoming CPI number. So oil down, gold up, and like I said, the 10-year yield about to hit 2%. Pre-market Wednesday, the futures were looking higher. A bit of short covering, FOMO, and chasing the stocks took stocks higher after the bell. Then a bit more sideways action, as we've seen. The Dow closed up just under 1%, S&P 500 up about 1.5%, NASDAQ up a bit over 2%. Oil back up a bit, 10-year yield down a little bit, and gold is still up. Fed speakers made some dovish noise. Bostic from Atlanta said that the market was a bit ahead of itself on the rate front. Mester from Cleveland reiterated this. We've spoken about this before. Remember, the Fed has these speakers go out to test the waters. Yesterday, that day was a calm the market kind of a day. So we'll see what happens. A few of the big names we're waiting to see: Disney and Pepsi. They were supportive of the market moves. Disney with an amazing report, and Pepsi beat all over the place. Raised their dividend, and another one of the companies that have pricing power, they actually came in, they raised prices. Remember, there are two sides to raising prices. Raising prices is good for profits, but it's not so good for Joe American trying to afford those groceries. So Thursday was seemingly a D-Day for the past week. Remember, we have PPI coming this week. CPI was last week. Going into the print, the futures were up a little bit, but turned negative right after the CPI came out, well above expectations. We know that a hot inflation number was not what the market was looking for, or the computer traders for that matter. 2-year Treasury yield over 1.5%, the 10-year over 2%, multi-year highs. We've talked about that as the market's starting to price in a Fed mistake. We'll have to see how that goes. The market bottomed, and then that big boing you heard was the bounce off of the bottom of the day. There was a big positioning move higher, but it failed to make a new weekly high. Then it rolled over and went back directionless until jawboning from the Fed returned. Yes, St. Louis President Bullard tried to make himself heard, and he was. Let's see what the market thinks of it, of the other side. He said, let's be hawkish. He said that he favors 100 basis points in rate moves before July 1st, including a 50 basis point move in March, much faster than the market's actually priced in. Piled on the idea that possibly we'll see hikes between meetings as emergency actions, and yields were off to the races. Stocks back towards the lows. The stocks held support, but barely. Very, very fragile right now. So there were a lot of moves on expectations of rate hikes. We'll keep an eye on that, but realize that Bullard is not Fed leadership, but as I said, testing the waters. I think the Fed got the picture as to what the waters look like. We did see some response from Daly and Barkin overnight that they're not looking for a 50 basis point move in March. Again, their job was to smooth the waters. At the end of the day, Dow was down 1.4%, S&P 500 nearly 2%, and the NASDAQ down just over 2%. Friday looked like it would digest the Fed information and move on, and actually did that for most of the day. Then I know that Jay Powell was probably not happy. The spotlight was stolen by Putin. Okay, that's probably not fair, so I apologize. But you get the picture. All the oxygen in the room was taken away when the National Security Advisor for the President, Jake Sullivan, held his news conference and said that the U.S. and the U.K. intelligence are advising that all U.S. and U.K. citizens leave Ukraine within the next 24, 48 hours. They said they can't tell us the hour that things are going to happen, but the risk of military action is up considerably. Diplomacy has not been abandoned, but while most people don't see this being a big issue for the United States or our markets or our economy, let's remember that Russia is the third largest oil producer out there, and overall energy markets in Europe will be all over the place if this happens. Wait until after the Olympics. Heck, on last week, we weren't even sure it's going to wait till after the Super Bowl. So the Russia-Ukraine news was a selling accelerant that came the Friday afternoon. We'll see what happens this week. Inflation and rates are really on the front burner. PPI on Tuesday, Fed minutes on Wednesday. We sell you the whole seat, but you only need the edge. Remember, dollar rally, oil price rally, stocks selling off, gold up, 10-year yield over 2% before coming down after the Ukraine news. This morning, Bullard was speaking on CNBC, stayed pretty hawkish in line with last week. No calm the waters talk from him. A few more big earnings this week: NVIDIA, Walmart, Deere, Cisco. Fed speakers too: Brainerd, Waller on Friday, Mester on Thursday. So let's tee it up for the week. Today, Bullard on CNBC. Tomorrow, a bunch of earnings. They'll be they've been pretty good, but the big inflation numbers, PPI, that's going to be the key on Tuesday. Wednesday will be more big earnings, a bunch of them, and retail sales. Remember, this is big. Remember, I keep telling you that retail sales and business spending it continues to be very important if we're going to keep this economy growing. And of course, Fed minutes on Wednesday as well. Thursday, jobless claims, housing starts. Bullard back on the mic. Mester too. Friday, we'll wrap up with a few more earnings. Waller, Evans, Williams, and Brainerd all wrap up the Fed speak for the week. This is another big week, so keep your eye on the ball. Remember, as we constantly discuss on Friday, this is when planning really pays off. So we've spoken about some planning ideas for down markets. Keep those in mind. Go back to the old videos if you need to see those, or just as always, stay in touch. Call me, email me. Let's see what happens. We'll see you on Friday for another planning video. Have a great week.